Good afternoon, everyone. This is Henry, and as we get into tonight's free content, I'm going to do a little bit of a short-term kind of day trading approach, thought process for the S&Ps, and show you why I think that we could be in for a little bit of a bounce into Tuesday, and if not on Tuesday, into Wednesday. Now, in a perfect world, we will see some type of move on Tuesday that the futures end up respecting this 38.30. So if we can stay above that and gap somewhere up into above 38.55, then I believe bulls will be able to find a little bit of traction. But part of what was unfolding today, and something that you can use every morning when the S&Ps open up, is to assess whether or not there is a true gap. So you'll notice that on Friday, when things really kind of started getting even heavier off the back of the selling that you saw on Thursday, notice how you open up down into here, kind of this vicinity, and that open is not only below the previous day's closing price, but it's below the lowest price that it had traded all day. So that is a true gap. And on any strength, you want to watch to see if there's acceptance back into that range. In the case of Friday, there was not, right? We rally right up into that zone that is constituted between 3,900 and Thursday's low. From there, you have a sharp rejection, and we're able to go on and accomplish this snow line that we were looking for to the downside. So to emphasize this idea even further, a modest gap that would keep this idea generally in play could start somewhere, again, up in here, 38.55, 3,800. Something that would be a radical gap would be back up above today's cash session high. Now, I don't think that's what's going to happen, but it is just trying to help that way of thinking, that one time framing, and the way that you interpret the next day's gap. So I'm going to take that, and then I'm going to use it with the 2-minute ATR trailing stop. The idea here did have a little bit of a fake out earlier in the session. That transition of the ATR trailing stop isn't perfect if you try to get short at the open and just hold it all day. That'd be one spot where this advance tried to shake you out a little bit. But what I found to be most impressive of it is look at how it's trying to hold Friday's low. Right, you get the little pierce, but there's just so much noise against that 38.55 and trying to go bid. But in that moment, the signal never shifts, right? It keeps you on the sell side of that trailing ATR, and then you're involved when the bigger part of the flush comes through, completing that snowline roadmap and the move down into that 38.30. So I believe that's a spot that we could bounce from. By no means am I going to tell you it is certain. I do think day trading has been a little bit easier in this environment, and if we open up down below this level, well then, and I should give you more precisely, if we open up below Monday's cash low, well then bears will still be in control, and 3,800 will be the next major target. Again, if that's where we open up, I'll try to day trade that. But having completed that target, I want to review the potential of a bounce in a few helpful ways of hopefully helping keep you on the right side of the intraday trend. So, as always, I hope you find the review helpful. You guys have a great rest of your evening, and we'll see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.